The market rally has run out of gas as people, markets, investors realize there is no pivot. There never was a pivot. It was just the latest market rally narrative due to oversold conditions, short coverings, things like that. The market was down earlier as much as almost 1% across the board, then came back into the green right before the close, and then now down at the close, but barely, 0.19% on the Dow, 0.3% on the S&P, 0.3% on NASDAQ. So relatively flat. I wouldn't call this a down day, but investors were looking for continuation of the rally to see if this was a new trend or what was going on. And what we do know is that what investors were largely looking at and looking for was the potential of a Fed pivot based off their meeting the other day with the pressure from the UN and other countries around the world that are feeling the pinch due to inflation, due to the dollar rising and things like that. And the Fed has said, nope, we are fighting inflation. We see rates rising higher for longer. We're going to keep them there. So the Fed speakers are coming out this week. Daly spoke today, and the message is still the same as it's always been. We're not stopping. We're not easing. We're not pivoting. We are going to keep rates higher for longer. And this Fed easing, Fed pivoting conversation is over. They want tighter financial conditions. Labor market is still relatively strong. And all of the data, economic data coming out is telling the Fed that prices have not come down. Labor market has not corrected enough. Housing market still is not corrected enough. It is correcting. And it's all in the news here. I'm going to do a separate housing market video, but the median sales price is still up on housing, even though some markets are correcting. But sales, number of sales of homes sold in the last year are down, and newly listed homes are down. So inventory levels are starting to rise in some markets around the country. Some markets are taking a bigger hit than others. And obviously, if rates stay at this level, let's take a look at bond yields. Bonds were back up again today, with the 10-year coming in at, there it is, 3.74. That was at 4% at one point. That's keeping mortgage interest rates up around the 7% range, and the 2 years at 4.4%. So that's keeping pressure on financial assets, continuing to keep the risk off trade going. So let's take a look at charts, and those higher rates are going to keep the housing market in correction territory, which the rates that we've seen over the last couple of years were distorted, very unusual. The rates that we're seeing now, anywhere in that, you can get interest only and other loans in the 5s with 30-year fixed in the 7s. That's normal. That's pretty good rates. That's generally normal rates. What we've seen over the last couple of years are highly unusual and very distorted, and have damaged the housing market greatly. And it's going to hurt a lot of people that have bought in the last couple of years, because values are correcting, are going to have to correct as rates continue to climb, and potentially will stay higher longer than what people think. So a lot to watch out for in the housing market. Here's Bitcoin continuing to bounce along this 2017 high. It did break above, it's breaking above this trend that we had, the major downtrend that we've been measuring from peak right here. That's your major trend line on Bitcoin that we've been watching. And the price did break out above that just briefly. I guess this needs to come down just a little bit, depending on where you want to keep it. So it has broken above it. The question is it going to find support here, or is it going to continue down on the top side of that trend? So we'll just have to wait and see how this shakes out. But it did pop above as these areas came in, that little trend line right there. And price did get up to around 20,400 here the last couple of days. This is Bitcoin on the daily here. And if we switch over to the hourly, we can see right here just trending up and starting to correct a little bit. So is it going to come back down and play with that 2017 high again and try to decide if it's going to break it? We'll have to wait and see. Let's take a look at the major averages right here. There's the Dow trying to hang on to this rally. Same thing with NASDAQ, same thing with S&P, above the June lows. And let's take a look on the weekly and see where we're at on this 200-week moving average. The S&P still above the 200-week, NASDAQ above the 200-week, Dow Jones above the 200-week. So that's a critical one there. and we'll just have to see if it maintains, because that has been major support throughout a number of years. And whenever that 200-week moving average is lost, price will play with that a little bit. That's the 2009 bear market. Whenever that 200-week moving average is lost and becomes resistance, then markets generally will go down and test those major lows that we've seen in the past and continue down. So the real question out there is, what are the markets going to do? Is this rally over? And are we going to see lower lows? Well, the indications would be based on what the Fed has said, and especially if we get another hot inflation print coming out from September, coming out here in the next week or so. I believe it's the next couple of weeks. We're going to get a report, maybe next week, on inflation. I'm not sure exactly what date that is. If it's a hot inflation report, the Fed is going to come out with even stronger, tougher talk. Markets will find another leg down and start to kind of talk about the potential of a bottom, but we still have recession concerns. We still have higher for longer concerns, and the Fed still has work to do. So this relief rally on oversold conditions, short covering, and a lot of talk about the Fed potentially stopping, halting, pivoting, whatever, because the UN putting pressure on the Fed and things like that. That narrative is now over, and the markets are continuing to digest that, unwind, and reach for new lows, especially if we look for and get a higher inflation print. So these are the things I'm looking at and watching. I'll see you in the next video.